Here we go. Hey there, I'm Mitch Goldberg. Welcome to my live stream, Be the Boss of Your Money, where we talk about investing, the stock market, the economy, interest rates, inflation, so much about personal finance, life cycle investing. We talk about it all here. So we've got a lot of things to talk about today, especially the markets hit new records. This is just like an ongoing trend. Stocks led today by the passage, I should say, of the infrastructure bill in the House of Representatives goes to President Biden's desk this week. So the cyclical machinery, heavy duty smokestack stuff really rallied big time today. So we've got a couple things to talk about. We'll get into a little commentary, little opinion. So we're going to roll the quick intro. And while you're watching this, if you have any questions, please ask them in the comments. I already see one question in there, and I appreciate you watching. So we're going to have a good show. Here we go. And let's get this show on the road. My name is Mitch Goldberg. I do this live stream, just something I do to share my knowledge. 32 years in the industry as a financial advisor, working directly with households, with families, helping them solve financial issues, meeting financial goals, overcoming obstacles, and coming up with options for people, and sometimes very creative things that become a part of what I do here on a daily basis. And that's the most fun thing, when someone has a financial challenge and I get to actually help them overcome something. And sometimes I put my resources together outside of my firm. Sometimes I hit my network for information and advice. That's what I love. I have one of the many things I love. I have an incredible network of attorneys, accountants, business owners, administrators in hospitals and education, human resources people, architects, commercial real estate realtors. It's just amazing, the network I have, thousands and thousands of people in it. I take good care of my network, and my network takes care of me. There's an old expression, your net worth is your network, and I truly believe in that, and I am living proof that that is true. So today we're talking about stocks, infrastructure. I think today is the 8th or 9th day in a row that the S&P 500 has hit a new record. I have some qualms, some issues, some concerns I want to share with you, and they're not the kind of concerns you're hearing elsewhere, but I think you will hear them, so we better go over those today as well. So we talk about financial advice, personal finance, budgeting, so many things. So if you have questions about what we're talking about today, or money or something like that in general, you know what to do. Hit me up in the comments. I love hearing from you. While you're watching this, if you would give me a thumbs up, or a heart, or a celebration, or a care, whatever the reaction is, depending on what social media platform you're watching on right now. I live stream the show, Be the Boss of Your Money, to YouTube, Facebook, and LinkedIn. And we're covering all of this. By the way, I'm going to be having some guests coming up, so keep an eye out for that. So let's go to screen 4 and talk about some of the stories of the day. So first thing we're going to do is cut to the chase. All right, I already have a few things up that I want to talk about. I'm going to make this screen a little bigger so you could see it on your smartphone. I think most of you are watching this on a smartphone, so hopefully you could see that now. Ford Forget the green part. Look at this part here. Ford was up 86 cents or almost 4.5% today. First time Ford broke through 20 in over a decade. So, if this Ford is a stock specifically that we've talked about here, as if you want to take a look at what a true breakout means. We spoke about Ford. I think it was last week, and even took the highlight out of the live stream and played it for everybody last week on social. So Ford, GM, GM's got a little bit more catching up to do to Ford. Ford is getting all the love because their last earnings report was phenomenal, way better than expected in revenues and earnings. And Ford is better able to source semiconductor chips and keep their sales and production going. GM looks like they're having a tougher time doing that. Eventually, they'll all catch up, and they'll all really be killing it on higher margin electric cars. Something you should know, by the way, about electric cars. If you take a Ford or GM gasoline powered vehicle and you move that into a battery operated or electric vehicle, I mean, of course, you have the big upfront costs, but on a per unit basis, if you could keep them at the same cost, the auto manufacturers make more money on the battery powered vehicle. Um, Auto manufacturers make more money on the battery powered vehicle than they do on the combustion engine powered vehicle because a battery powered vehicle has much fewer parts, which means they're easier to build, easier to maintain, and have bigger profit margins. So, something to look forward to. So, the whole industry, the whole automobile industry could be in for some bigger profit margins for years. So, the whole auto industry could be in for bigger profit margins for years as they go through the transition of converting their sales from combustion engine to electric. So something to think about. Let's pop back up here. Tesla was down um, almost 5%, down just about $60. It's down another $4 aftermarket trading. It's really a non-event. $4 on a stock that's $1,100. The point is, I don't know if you saw this, but Elon Musk put out a poll in Twitter. I'm not sure what his net worth is. Is it 150 billion, 200 billion dollars? So he put out a poll and said, "I'm going to abide by this poll, and I'm going to sell." Or he asked, "Should I sell 10% of my holdings to pay for taxes?" Uh, and he said, he doesn't get any cash compensation, so the only way he can have cash for taxes is to sell shares. And he has what was written about after that poll on CNBC was an article that said, well, he's probably going to owe about $15 billion from stock option transactions. He was granted a lot of stock options for Tesla stock at like $6, which is worth something like $25 billion. And the taxes on that would be as much as $15 billion, like, 55% or so. So I wonder if people said, no, you shouldn't sell stock, then what would he do? But the point is, when you have your biggest shareholder selling 10% of his own personal stake, that could spook people. The market goes down, and maybe this is just Elon being Elon, or maybe he's trying to send a message, don't worry about it. In my experience, when insiders sell for tax purposes, and it's generally known and accepted that that's what it's for, other than like, it doesn't really hurt the stock that much. I think investors understand it. There are times when insiders sell for not much of a reason. Maybe it's not tax reasons. They just want to raise some cash. But it always, you always think in the back of your mind, why is that person selling stock? Maybe I should be selling mine also. But I think insiders want to really telegraph to the market why they're selling, that it's a legit reason, it's a personal finance reason for taxes. not because there's anything wrong with the underlying company or because of my insights into the near future of the company's financials, and there could be a hiccup or something negative along the way. Only time will tell, but Tesla has been on a hell of a run. So let's keep going and look at a few other things. All right. So the Dow today up 104 points, which is no big deal, up 0.29%. There are some people who still say, and, people who are been around a long time, when they see the market, the Dow up 200 or 300 points or down 200 or 300, a 200 or 300 point move either way, they say, wow, the market's down 200 points, like it's a big deal. And, with a 36,000 Dow, it's, this isn't the 1970s, So Dow up 104 points, new record, barely, but nonetheless continuing the record highs. S&P only up 4 points, up 9/100ths of a percent, barely up. Nasdaq up 0.07%, up 10 points, but nonetheless, these are records. Gold another day above 1,800, and maybe that is telling us something. And I want to talk about inflation in a moment. Energy, which had a cost of oil had a setback when the Fed said they're going to start tapering, and assets that do owe in the dollar is weak went down. That means oil, and now oil is starting to come back. Same thing with gold. U.S. Treasury 1.49%. So people out there who were worried about inflation and just hammering away at, oh my goodness, inflation. Well, here we are with some inflation, and yet the 10-year Treasury is still at 1.49%. And inflation's 5.4%. So why aren't U.S. Treasury yields rocketing higher? In the beginning of my career, this would not happen. 10-year Treasuries would be at 6%, 7%, above and beyond the rate of inflation. Stocks would have tanked 40, 50%. We'd be in a brutal bear market. Everybody would be upset. All the happy clients would be unhappy, and it would just be a horrible situation. What's different today? Well, I think there's a lot more confidence in the Fed. Whether or not it's justified is a different story. But what I also think is that investors do believe in the scenario where inflation moderates, the supply chain is slowly going to get fixed, and inflation will start to come down. And there's still a big reach for yield. Pension plans, insurance companies, institutional investors, endowments, and individual investors like you and I, we still look for yield, right? As a financial advisor, it's really hard to find decent yield for clients. Clients retire and they say, I want to, generally speaking, when you retire, as you approach retirement, you want to start getting out of stocks and you want to start converting that money into income producing assets. You don't want to just put it into a money market or savings account that pays nothing. You want to put it into something safe that pays a good yield. But I've been saying this for a long time. Nothing safe pays a good yield, and nothing that pays a good yield is safe. And I'm pretty much agreed upon that scenario will be staying in place for the foreseeable future. Okay. So we're going to talk about gold in a minute, but I want to just get back to this. VIX. I'm adding my commentary, my expertise, my thoughts, okay? The VIX was up. Now, if the market hit a new record, all three major averages, new records, markets are up, we get the infrastructure plan. Remember I said gold, we need to talk about that? That goes hand in hand with the VIX. The VIX is 17.22, and I've been saying, when it gets under 20, we go into rally mode. It goes above 20, we go into retreat mode. But the fact that the VIX was up 11.5% on an otherwise super calm day filled with nothing but equanimity, good news, good earnings, that tells you, in my opinion, We've got um we are probably going to, you say probably because this way, if it doesn't happen, you're right. If it does happen, you're right. So here's what I'm going to say. I'm going to take out the word probably. It's my sense. I believe this, that we are going to be shaken out of our lull a little bit in the coming weeks. I'm not saying that we're giving up this great rally we've been in for the last 3-4 weeks. I'm not saying that, but that's where we are. Okay. And let's just take a look at the Russell 2000, the small cap index up 0.23, in line with the rest of the averages. So here's my thought of the day. All right. I've got my notes. I like write bullet point notes of things I want to hit upon in the show. Okay. And you could see them right here. I keep them right over here. Okay. The stock market climbs a wall of worry. And we had the Delta rising COVID cases, which slammed shut the economic reopening that we started to see, last spring, earlier in 2021. And now that is going away. But for all intents and purposes, and I don't mean that people should become complacent, but the COVID pandemic is pretty much in the rearview mirror for investors. We've got 2 pills now for COVID from Merck and from Pfizer. We actually have pills you could take. You get COVID, you take a pill now. There's a pill for everything, right? There's a pill for COVID. That's huge. Okay. We have something like 95% of all 65 plus people in this country are vaccinated or have at least one jab. Something like 75% of all eligible people, adults, are vaccinated. We have vaccinations, COVID vaccinations for kids now. I'm pretty certain that if you do not get the COVID vaccine by now and you have children, you are not going to be getting the COVID vaccine for your children. That's your choice. But the point is, COVID is getting into the background. As bad as the supply chain issues are, we've been talking about this ad nauseum here on the show. It's like who dare calls me while I'm doing my live stream. Okay, we talk about the supply chain stuff all the time and how we would have like a year-end rally coming up. So I bet you it's a cold call. Yep, I could tell who it is who would know that I'm doing the live stream, but nonetheless, you're calling. So that's all right. I welcome your calls. The supply chain, even though we're in the peak of the supply chain, I think that's important, that it's the peak, that things get better from here with the supply chain. Products start coming in, port congestion starts to clear up. Products are, intermodals are taken off boats, put on trains and trucks, and we start getting goods moving around. The U.S. is now reopened to international travelers with proof of vaccination. That's big because there are tens of millions of people in Europe and elsewhere who are vaccinated. So that starts to come in. Again, COVID cases are dropping, and we finally have the taper announcement when the Fed reduces its bond buying program to support the economy. We now have that out of the way from last week's Fed announcement. So those were the 3 big worries, and they're receding. And again, even though we're just getting it to the taper, just starting at the end of this month, and we're at the peak of the supply chain problems. Remember, peak means we're getting to get through. We're getting through over that hump, and things are going to get better. We're running out of things to worry about. Is my issue. And if we're running out of things to worry about, it's probably it's from a contrary. If we're running out of things to worry about from a contrarian perspective, it means that investors who would want to commit money to stocks have already done so. And now the market has to consolidate its gains, maybe trade flat for a little while, pull back a little bit. So just don't wake up every day expecting that we're going to see this brand new gargantuan high. Let's just take a quick look at the crypto market. And here's an example. I mean, Bitcoin is up another just about 6% today. Ethereum is up another 3.65%. Litecoin is up 12% today. Doge, the joke, well, it's up 5%. It's 28 cents. It's gone from like 25 to 28 cents. Percentage wise, I know it's a big deal. All right. So there's a lot of energy in the market. When you see the speculative stuff move like crypto, that means there's a lot of energy in the market, and that's good, generally speaking. I think for risk assets like stocks, but you're not going to see these moves every single day, and I think we need to curb our enthusiasm. I've heard that expression before. Okay, so that's what's really going on with the market. So I want to ask you a quick favor, and I hope some of you take me up on it. But if I'm thinking about asking people to send me a video question, just record yourself asking a question, just first name and the state that you live in, and ask me, take a video of yourself, 10 seconds, 8 seconds, whatever it is, and ask a question about personal finance or investing or stocks, what have you. And I would love to see that and play it on the show because that's what people want to know. I've got a question here from Ignatius Gentilco. I hope I pronounced that correctly. Will this infrastructure bill speed up the debt ceiling date? No, it will not speed up the debt ceiling date. That's coming up in about 4 weeks. It's not going to change anything. If we could get past the social spending, build back better bill that Biden wants, and we get that through reconciliation, we're pretty much we're through the debt ceiling. So I don't think it's going to be a well, I don't want to say I don't think it's going to be a problem because you never know what's going to happen in politics, but it doesn't change anything. If anything, if we let ourselves get past the debt ceiling without an agreement, then that certainly would be a negative. And maybe that's one of the things that the VIX going up, gold going up is telling you. Last thing I'm going to say, I promise, last thing. With so many things out of the way, like COVID and the reopening of the U.S. economy really is in full force. Like if you don't know that the U.S. economy reopening is in full force now, then it's like I just want to say, please open your eyes and take a look. Okay, there's traffic everywhere. There's waiting line. There's lines at restaurants. It's just every indication I could possibly look at is telling you we are in full force reopening in the economy. People are spending money. Interest rates are still low, still pretty easy to get access to borrowing, credit cards, mortgages, that sort of thing. So we really are in a pretty powerful economic recovery, not expansion yet, economic recovery. Economic expansion is when the economy still grows, but the growth rate moderates. So that's going to be the next big worry is liftoff, and liftoff means when does the Fed start raising rates and put us into a new interest rate regime, new interest rate cycle. So that's going to be the big focus for markets for the next 8, 9 months. The taper ends in the middle of next year. And then we really need to start, putting together the pieces of the economic puzzle, so to speak, to decide what's next for interest rates. Thank you so much for watching. I'll be back tomorrow at this time. I thought it was going to be out tomorrow, but it turns out I'll be here. Very excited about everything going on. And for what it's worth, whatever happens, I really do find all of this economic and political news just incredibly exciting. I hope you do too. Speak to you tomorrow. Thank you.